Imagine waking up every morning knowing exactly when to enter the most profitable trades in the Forex market. Welcome to the world of moving average crossover strategies, the latest sensation in 2020 SXS Forex trading landscape. Today, we'll dive into the specifics of implementing this powerful technique to boost your trading results. The moving average crossover strategy is based on the idea that by monitoring the relationship between two simple moving averages, traders can identify market trends and potential reversals. The strategy involves setting two moving averages with different time periods, typically a short-term and a long-term average. In this example, let's use a 50-period and a 200-period moving average. Short-term moving averages are designed to track the current market trend, while long-term averages provide a broader perspective on the overall market direction. When the short-term moving average crosses above the long-term average, it signals a bullish trend, indicating that the market is likely to continue